Hey traders, welcome to this training on market structure. Whether you're trading FX, synthetics, or crypto, this is the foundation you must master. By the end of this video, you understand the trends, break of structure, and how to spot out high probability setups using market structure alone. So grab a notebook and let's dive in. So first of all, we'll teach you what is market structure. So that is what you need to know. And market structure is simply shows the direction, the direction of the market. Are you getting me? The direction of the market. So the direction. Okay, let me give you a full explanation. It simply shows the direction of price movement. It is how the price forms highs and lows over time, helping us read the story behind the candles. So, market structure now, it shows us what the movement of the price. The movement of the price what over time. Are you getting me now? So, in this chart now, this is gold. So, on gold, let me delete all drawings first. So this is gold. So on gold, head over to the H4. Sorry, the H4, the H4. So this is 4 minutes, 4 hours time frame. So and you can see here that gold was have been on a bullish trend. So gold is what on a bullish trend. So it's just buying since the past 2 weeks now. Gold has been buying. So there are 3 keys, like the 3 main keys you need to know about market structure. 1 is the uptrend, 2 is the downtrend, 3 is the range. So these are the 3 keys you need to know about market. So and the range, like people asking what is range. Range is the price moves sideways, which no clear trend. Are you getting me? Range is when the price moves sideways with no clear trend. So that is for ranging market. It's just like this one. Let me show you on my chart here. Okay, which is more likely of this one here. So from here to here, this is a ranging market. Hope you can see my screen. This is a ranging market. Market has been ranging, so as it is ranging from here, so the market, let me bring out my arrow so I can use directly. So the market was, what the market do, it came from this up place. Sorry, let me bring that. It came from this upside here, it came down, it went up to that to the same zone, which is our resistance zone. So here, the down here is our support zone. So this is the resistance and the support. So traders that do trade resistance and support, this is the best time for them to enter the market. So they can sell from here. If the market reach here and buy, they will sell by catching their trades from now. But as a price action trader, this is very risky for us to enter. We don't enter a side market or a ranging market. We leave the market and see what is either going up or down. So and for the uptrend, this is an uptrend here now. But before I show you that, first of all, in the market, in this market structure, the structure only comprises of what? The higher high, the higher low, the higher high, the higher low, the higher high, the higher low, the higher high. So this is what it was. It mainly comprises of. So in this higher high and higher low, higher high and higher low, this is for the what? For the uptrend. this for the market that is going what in an uptrend. This is an uptrend market. So, and as it's going this high, it's doing what? Break of structures, retest, break of structures, retest. Just as you can see here, it went up, it came back, retest. So it broke this structure, which is here. This line here, it broke structure. So it retest, went up, broke this structure. So this structure is what gave this here, make this down point here to retest. Let me mark it up. This point here to what retest. Every break of structure there is a retest. Every break of structure there is a retest. Hope you get me. So that is market structure. Same thing for the what downtrend. So it's just likely the same. So in the case whereby the market started what change, there is something we call change of character in the market, whereby the market was buying higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So it created something like this, broke structure. As it has broke structure now, so it went up again, broke another structure, went up again, broke another structure. So in this market now, in this market, once the market, some traders, once the market broke the first structure like this, they will mark out their this thing here. They will mark out their this thing here and call it what? Change of character. This thing here is not a change of character, because at times price do what? Come back here and also what? Keep going up again. So don't get it confused. Don't misuse the structure. Okay. So once you want to confirm your entry, you can take here this second part here, this down part here, as what the change of character, or no, at least after 2 breaks of structure, which is this first one and the second one here, which is this one 2. So after 2 breaks of structure, you know that the markets have changed character. Then it is now advisable for you to sell or take a sell trade in the market. So this is what market structure. So without wasting much time, so I'll go to the chart to show you this thing I'm drawing here. Okay, look at this chart now. Go on good. So this is what an uptrend, whereby the price came low, higher high, higher low, higher high. So just like that, and like that. So that is the same thing, due to show that this market is in a uptrend. So I getting this is a uptrend market. So there are some common mistakes that traders do make in market. One is trading without confirming structure. Like, you know that this is an uptrend and you start placing a sell trade here. How do you think that this market will sell? For example, somebody saw this market. You see this market now. You have marked out higher high, your higher low, higher high, higher low, higher high, higher low, just like this. And you want to place trade and you're placing a sell trade. How do you think that this market is going to sell? Maybe you place a sell trade, let's say from here, because you saw this small bearish candle here. You place a sell trade here. Put your TP to this point. How do you think that market is going to sell when you have seen the market is in an uptrend for past how many weeks? Look at an uptrend, and you intend to sell from here, from this point. Market will hit you out. That is where traders do say, that is where traders do misuse the market structure. Okay, so they are trading without confirming structures. You have to confirm your structures before you enter the market, so you won't lose your money. So a second mistake traders do make is ignoring break of structures. That is very important. Ignoring break of structures. For here now, example here now, in here the market, what, as you can see now, there is a break of structure here. Okay, there is a break of structure here, there is a break of structure here too. So in this break of structure now, every break of structure, what, there must be a retest. So as I've said, higher high, higher low, then there is a break of structure, another higher low, then there is a break of structure, another higher low. So that is how the market moves, and it moves like that, what, continually in this, and because this is what, an uptrend. So after you see a break of structure, next thing that will come to your mind is what, the market is what, going to what, sell. Are you getting me? So like, not that it's going to, like, it's going to have a retest. So after this higher high, higher low, first one, second one, third one, your entry should can you can even catch entries from this market like this. You can catch entries, but some traders do ignore the break of structures. So break of structure is once the market break a structure, you know that it is going to what, retest. So as it's retesting, you can what, put your, sorry, as it's retesting, then you put your what, entry at those zones which you know that the market is going to what, retest from. Are you getting me? So just like this one, the market was came there, retested there, went up. Even this side too, as it have went up, you draw your next what, retest. At this point, please, this is only for our a continuation market. It's for an uptrend. You don't want to see a ranging market and start drawing this kind of thing on a ranging market. You lose your money. So only if you see the market what is what on a serious uptrend or downtrend. So like this now, if you place a trade here, let me use this. Let me use this thing. If you place a trade here now, for example, and you're using this break of structure now that I taught you, and you're using it very, very well. Once market, if you place your entry here now, your SL will be here. Once market come here to tap you in, you'll be in profit. All these things, you can even choose to hold the position till this point, or any time you want to close your entry. You feel like you want to close it, you can close. You can even hold it to this point. You see this, and this is what, massive profit. If someone should take this kind of trade, the more it is good, the more you're opening what, more positions. Because first one, second one, see the third. Let me just see the third one here. The third one was, so this is the third one. Just like that, break, higher high, higher low, higher high, higher low, break of structure, retest, break of structure, retest. So that is it for gold. So this is how gold works. The second mistake, the third mistake is what, entering trades during consolidation. That's why I said, as a trader, if you see a market in a ranging market or a choppy market, please run away. Do not enter the market, or you lose your money. Okay, for example, now this kind of market, somebody will see this type of market and try to enter a trade here. You will lose your money. You will totally lose your money. Yes, you will lose the fucking money. So in this type of market, you leave the market, you go out of the market, because if you enter this type of market, you might lose your money, and you lose a lot. In fact, let me use that word, a lot. You lose a lot of money. Another one is what, placing SL too tight out of the structure. Another people that do place SL where they want to save money. So you see, one thing you need to know about this structure is what, if you want to analyze, and you analyze a trade, and you see that you're going to enter the trade, and you discover that your SL in the chart is what, is much than you expected. Alright guys, so let's continue. For example, now you discover a trade at this point. Alright, at this point now, let's make here our point of interest. So you discover a trade from this point, and the market has what already come down. You did not place order. The market has already come down, retest, came down to this point, and it was at this down point that you saw the trade. So let me change the color. So it was at this down point, so where this arrow is, that you know discover to enter the trade. So as you're now entering this trade here now, your SL now, you know that as you're entering this trade here now, you know that my SL, you enter here, your SL will be here, or your SL will be somewhere around here. So let me just bring out the position thing. Okay, let's say you're entering this down part, and your SL should be here now. Some traders now, if they enter, they will not put their SL here, so that in case market was mistakenly, move up to hit you out of what market. The market normally do. What is wrong with network? Okay, markets normally do those kind of stuff. So at least put your SL in the next structure, which is here. This is how to set your stop loss, so market won't hit you out on a trade. I've seen most traders complaining market hit me out of a trade, this and that. Is when you put your stop loss to this point. If you put your stop loss to this point and enter, if market small back movement in the market will hit you out of the trade. So put your stop loss at the next structure, or if you have higher amounts, maybe you don't know, put it at the next structure, so you won't lose much. Some people shall do their own here to this point, but no, that is very much. But I do put my own here, so you won't risk much. So if you put your SL here, it is very hard that market can never go up to this place, except your analysis is invalid. If your analysis is valid, everything is okay. Market can never go up to this point. So say it is going to hit you out, and you will take your hit your TP, and boom, you're out of the market. So this market structure, if you're trading only structure, if you're using only structure, you're trading with market structure, you'll be making it most of the time. So all these things now, if you fix this, your win rate will go up. If you're using market structure to trade most of the time, because me, I'm a price action trader, so, and I also use the market structure too. So I join two of them together to analyze the market. Let's say for example here, let me look for another entry to show you guys. Okay, from here now, from here market broke this structure here, right? It broke it with it broke this structure, so, and it broke it with the body. Mind you, if you're doing break of structure and in this type of structure now, if the market breaks the structure with a wick, you know that your entry is going to be invalid. So here now it broke it with a body. That means the structure, I mean your analysis is going to be valid. So as it broke it with the body, you put you just find the last swing low, just okay. So from here now, which the market has broken the structure, okay, so let me say what caused the break of this structure. It was this retracement down here that caused the break of this structure, okay, and which the market also continued to go up and break other structures there. So just mark your OB here. So in this case, market broke structure and market broke structure to the upside, your OB is here. So, and now you can even mind you, I'm teaching you about the break of structure. I mean how to use structure, what market structure to trade. So you can, because you can use structure what to trade. Market structure is the backbone of trading. If you don't know market structure, it is the backbone of what of trading. If you don't know about market structure, you won't be profitable in the market. You have to know everything about market structure. And this thing I'm just showing you guys here is just the basic market structure. It's the basic. So okay. So after this break of structure here, mark another block here. So you see the move will catch. You know, you see the move will catch here. So these movements, all these movements is what we catch, and all these movements, if you use the macro lot, you'll be getting up to $50 or $60 on that movement. So that is how you catch it. So I will have decided to show you guys more. So, and let me tell you guys the time frame to use, the best time frame to use. So sorry, I'm using 4 hours because I know what I'm doing. So if you're a professional, please. So if you're a beginner, use the 1 hour or the 30-minute time frame to use for the market structure. 30 minutes or the 1 hour time frame is better for the market structure. So this is a 30 minutes time frame. 30 minutes. So if you learn to read market structure well, you will stop chasing signals and start trading with confidence, because market structure is all you need to know about the market. Even you're doing Forex, you're doing synthetics, you're doing crypto, you need to know what market structure. Okay, so this is 30 minutes. Let me find another. Okay, this is an uptrend here. There's an uptrend. So, and in this uptrend, you see this one up. Okay, let me find the break of structure. The break of structure. Sorry. Let me find one. The break of structure is like I'm not seeing. Let me check here. This is a downtrend. So okay, I've seen the break of structure here. You have to master it so you can find them. There are many break of structures here, not only this one, even this one too. So there are many of them. Yeah, I said many of them. There are many. You will see this one here too. So here, market broke it. It broke that liquidity here. Even here too, market broke this structure. So that is how break of structure works. So, and in this break of structure, let me show you how to use them. Let me show you an entry. So this break of structure now, this structure was broken, and what caused this structure to be broken is because of what? This high, this high, this high here, this high is what caused the break of this structure down to this point. So as it broke the structure, normally your other block, you just place it. So you know how to do it. You know how we do it here. So we place what other block. So you see, and you catch. There we catch two movements here. So one is this one here, which is market retrace it, and your TP should not be that much. So and the second one, which is this one, so that the market was also retrace it back at the same other block. Remember, we are using what market structure market structure to be catching these entries. Market structure, break of structure, retrace, retest. That is what we are using here to catch these entries. So see this one. If you know the market structure, you'll be making a lot of money from it. Making a lot of money. I'm telling you, a lot of money making from the market every day. Going here too. You see, you'll be making a lot of money with market structure. Just master market structure. Know what you're doing. You'll be catching the movement. You'll be catching them. So and your SL should not be that much. You know how to place it. So at this point, your SL should not be that much. If you draw that block, maybe let it just cross the other block a little bit. So that is just it. You see, there are many more. I don't want this video to be long. That's why I'll just cut them here. So in this market structure, if you learn you learn something from this video, please like, subscribe, and share this video. Thank you.